Good morning and welcome everyone to the Money Control live stream. You are watching Markets with Santo and CJ. Well, after the capitulation in the last half an hour of trade yesterday, it seems like we were in for a bleak morning, this Wednesday morning. But things are looking different. It seems that bulls are going to make a comeback on Dalal Street. And how? SGX Nifty 50, the Nifty futures that are traded on a Singapore exchange, are indicating possibly an 80 to 90 points bump on the Nifty 50 this morning.
So your yellow t-shirt might still do the work after all.
It seems so, and I'm happy about that. US markets, wow. So yesterday when, our markets were falling like 9 pins, US futures were indicating a 200 to 300 point cut on the US market, but US market opened in a spectacular fashion and there was green all around. So they closed pretty strong with more than 1% gains for most of the major indices. Brent crude oil, which has been such a big concern for our market, it actually fell 5% overnight. So yeah, things looking pretty good. The cues are very good for this morning.
Well, if you look at the early rate so far, CJ, it's still the Nifty seems to be struggling to break above 17,000 despite the SGX Nifty showing about 100-point gain. And this is a market which does not seem to be going anywhere in a hurry, for the simple reason that there's just too much FI selling at this point. There is also a limit to which the market can absorb. And in April alone, you've seen close to about 20,000 plus crore worth of stocks being dumped by FIs. So that itself could, I think, keep the market in check. You're seeing, of course, some kind of buying from HNIs in small and mid cap stocks, but in itself, I don't think that will really make a big difference. And also remember, crude price, you mentioned that about slumping a bit, but there are reports that the European Union might go in for tighter sanctions on purchase of oil from Russia, which in turn could lead to a renewed spurt in crude oil prices. And JP Morgan has said that in a worst case scenario, crude oil prices could even rise as much as $185 to the barrel. Yes,
wow.
CJ.
Anyway, count on Santo to rain on the bulls parade as usual. That said, it's time for our next section, and that is Market Current. And today on Market Current, I think we need to address the disastrous earnings trend that has come in from a major over-the-top platform, Netflix. So Netflix yesterday, last night, came in with its reports, earnings report for the first quarter of 2022. And wow, 200,000 subscribers lost. The first time ever in more than, 10 years, that Netflix has lost subscribers. And overall, it does not seem to be like a one-off thing. Netflix is now saying that in the coming quarter, in the June quarter, it will lose more than 2 million subscribers again. So clearly, what this is indicating, in my opinion, is that the pure play internet themes are now taking a backside, and the pure play physical themes, that is, companies which are actually providing services on a contact basis, are coming forth.
Well, and CJ, there's something called reversion to the mean. We are just saying that, you said that it's happening for the first time in 10 years, but the pace, at some point it would slow down and you could even see some kind of a dip, and that's exactly what you're seeing. So I don't think you need to get too much worked up about it.
No, I think we need to, because I think this is probably an indication of a bigger theme that is playing out here. When the pandemic struck, with all physical activity largely, services activity shutting down, multiplexes, entertainment arcades, whatnot, people sought entertainment online. People sought entertainment on internet, and then you saw that entire rally in tech stocks in the US, new age tech stocks here. We know how that story played out. But now with the economy is reopening, the threat of the pandemic receding day by day, it seems so far because of the vaccination that countries have been able to do. People are revenge spending and they want to go out. So that is what.
What does this mean for Indian multiplex players in general?
Yeah, exactly. CJ. And Indian multiplex players could probably be smiling last night. They would have had a sound sleep, because what this is saying is that people are going to come back to multiplexes. I mean, people who were very, very eager to write obituaries about multiplexes in 2020, thinking that, movies are now going to only launch on OTT, and who's going to spend like 500, 600 rupees on a movie on a multiplex theater. Well, look at what is happening with KGF. Look at what is happening with other blockbuster hits that have come over the past 3 to 4 weeks. So something to look out for.
And CJ, I think the sharp fall in the market in the last half an hour yesterday, which we were talking about. So now there's a lot of chatter in the market as to what exactly could have caused it. And one of the theories is that probably, the smart money was on the side of, the put buyers.
Oh.
So it usually does happen that, option buyers in general, they stand to lose money, 9 times out of 10.
Absolutely.
Because most of the options expire worthless. But there is the odd occasion, when
they
the
turn
put,
the tables.
yeah, and the option writers have their shirts taken off, and I think this is what happened.
Yes.
There is something called that the pain point, maximum pain point in the market. So maximum number of outstanding option contracts were in Nifty puts of 17,000 and 17,000.
Yeah, I mean, people are looking at it as a major support that it will not break down below this.
Yeah, so I think the option writers also got a bit carried away, and then suddenly you have in the last half an hour market moving exactly in the opposite direction.
Yeah,
so
it created a crisis for us when we were going live, right?
Exactly. So this is what the people in market are saying, that a lot of these big funds, big players would have bought a lot of put options, and then kind of triggered some kind of a panic in the last half an hour of trading.
Well, it was panic yesterday, but it looks like there is relief today. And that said, we know what the market is gearing up for, but what do we have on stocks today?
Well, the focus once again will continue to be on IT stocks. That's where there's been a dramatic turnaround in sentiment, a turnaround for the worse despite a good start from TCS. So today one of the stocks that we'll be looking at is Tata Elxsi, that will be reporting its fourth quarter numbers. Now, so far the company financial performance has been quite consistent, but also, mind you, this is one of the most expensive stocks in the IT pack. It trailing 12-month P is about close to 100
Yeah, I mean, the
times.
sort of rally it saw in 2020, 2021, it was on everybody's lips.
Exactly. So now, the stock has taken a bit of a beating in the last couple of weeks. It's fallen from its 52-week high. It's down by about 18% from its 52-week high. But these numbers will be closely watched. If the numbers disappoint, you could really have the stock coming under pressure.
So are you expecting a disappointment on the numbers?
No, given what the overall market sentiment is, you really need to come up with something spectacular.
Yeah.
Otherwise, the stocks, I mean,
the bar has been raised. The bar has been raised.
Everyone is just waiting to take money off the table. L&T Infotech, the other company which reported, IT company which reported its numbers were just about in line with market expectations. Most analysts are cautious to bearish on the stock. Nomura has said that much of the improvement in the operating profit largely came through cost savings. That's not a very good sign. So Goldman Sachs has retained its sell rating. Nomura is neutral on that. The third stock is Chambal Fertilizer. Now, the stock was a big favorite with HNIs. It's seen a good run up, but it fell about 10% yesterday. Massive selling on huge volumes. Good financial performance there by the company, and it still doesn't look very expensive. It's still about 10 times its trailing 12-month price to earnings EPS. But at the same time, there's some kind of temporary panic sort of situation in the stock.
Yeah, right? I mean, it could be a bit of a profit taking, given that overall the sentiment towards the fertilizer space seems to be quite bullish, because fertilizer prices have been, because of the rise in input prices for fertilizer companies, they have also been able to pass on the prices to farmers. And of course, the government is stepping in to cushion the blow for farmers, but it's not stepping in to restrict these companies from raising price. So that is quite good for fertilizer companies and their margins. So therefore, overall, from a medium-term perspective, the sentiment is still quite positive. So I will probably, this would be those one-off opportunity to buy on the bargain on Chambal.
Tata Power, again, a stock that's been falling very rapidly ever since the company announced its the stake sale in its renewable arm. Now, the futures have slipped into a discount to swap price, and huge build-up in open interest also, which means that you're seeing more of short positions being built up there. And the fall in price along with the decrease in open interest in the Tata Power near-month stock future shows that there's been huge build-up of long positions, and it's the weak hands which are now getting out of the
So a lot of people are booking profits at the same time. A lot of people are adding short positions or bearish position on the stock, which basically means that the stock is not going anywhere in the near term.
And if you look at most of the analyst reports on the company, they have been cautious to bearish, and the price targets are mostly in the range of anywhere between 212 to 240, and so that could
which
also,
is very surprising actually, given that a lot of the street was very bullish on Tata Power not so long ago, and it seems what was supposed to be a very positive trigger for for the company. What was supposed to be something that the market was really looking out for, the stake sale in the renewable energy business, has actually become a trigger for a lot of people to take their profits.
Yeah, there's something
from
called,
the table.
you know, a fair value or valuations, you know, which, and lastly, Mindtree, the stock, this company reported fairly decent set of numbers, but once again, valuations is what the market is worried about. According to Moneycontrol Pro, this company will continue to do well going forward also, and it's very strong in the area of digital transformation, which gives it an edge compared to other players. But in the short term, there is a lot of chatter that the company may get merged with a group company of parent Larsen & Toubro, and which is why there is some kind of concern. But this is clearly a stock to watch out for.
Yeah, so on my list is first off is ACC. I told yesterday in the evening show that ACC's earnings will be something to watch out for, and earnings were pretty good. They defied skeptics and reported very strong numbers. Q4 numbers, Q1 because ACC follows the Jan-December calendar. The Q1 numbers were pretty good with net profit rising about 41% sequentially. However, volumes were a little disappointing. They fell about 3.3%, but were in line with estimates of analysts.
This is the point we were arguing on, CJ. I was telling you that they can raise prices, but only so much. Now you're not even seeing the full impact of the rising input prices kick in. Coal prices have risen further from that. So this quarter there could be more pain, and already the volume dip means that there is resistance at higher levels.
Yeah, so, but to take to come to your point, actually earnings both on PAT, on margins and on operating profit as well as on sales were above street estimates. So it is something of a good indicator for a lot of the rest of the cement companies in the listed space.
Most analysts are negative anyway.
HDFC Bank, the recent capitalization stock now is probably may become a trigger for short-term buying. So a lot of the technical analysts have pointed out that the stock is inching towards making a double bottom, at least in the near term. And usually what happens is that when you make a double bottom, that is if you have fallen to a particular price point and then you rise again and then you fall to a particular price point, same price point again, that is usually seen as a good support level for the stock, and then usually you see a bounce back, at least a bounce back in the short term. So maybe what people, technical analysts believe is in the near term at least, HDFC Bank could be in for some sort of a relief rally, and boy does it need that. I mean 19%, almost 19% decline from the announcement of the merger with HDFC on April 4th. So something to look out for on HDFC Bank.
Well, CJ, on Twitter already memes are doing the round that probably HDFC Bank is on the way to becoming the next ITC, because if you look at the last 3 years, in fact, you would have been better off parking money in a HDFC fixed deposit rather than buying the stock. In fact, returns have been just about abysmal. But that's also, yes, the market has opened.
We're just 3 seconds away, and it looks like it's a green start on the street.
Yeah. So Nifty above 17,000, it's up about 83 points.
Oh, it crossed your threshold, the psychological threshold of 17,000. So
Sensex is also up about 187 points. Nifty Bank is under pressure though, down about 12 points as we speak. So overall, it seems a firm start to the day, but
yeah, I mean the breadth of the gains are quite solid. On NSE, about 1,600 stocks are advancing for every 400 stocks that have fallen. So I mean a ratio of about 1:4. Nifty Midcap is has a very solid start. The index, Nifty Midcap 100 index is up about 0.6%. That is looking pretty good, at least from a retail investor point of view. We're largely invested in mid and small cap stocks. If you look at Nifty Bank, now it has turned into positive, but it's still a very choppy trade for Nifty Bank. So, I mean, the banking index has been a big drag on the market for the past 3 to 4 months. So, we'll have to keep a close eye on that. If the Nifty Bank declines and is unable to sustain the gains, then possibly Nifty will itself also come under pressure.
Yes. And moving over to your stock,
yeah.
CJ.
So the next stock on my, before the opening bell, the next stock that I was really going to talk about is RIL. Just as a short disclosure here, Network 18 is owned by a trust which is the sole beneficiary of whose is RIL. So on RIL, it was the lone soldier on the street. The stock was up about 3%, and the lone soldier for bulls when the rest of the market was capitulating. Morgan Stanley, recently came out with a report, and it has added the stock into its, emerging market focus list. So basically, focus list is basically a model portfolio that brokerages usually create, and now it has added RIL into that model portfolio. And its argument is that RIL right now is the best energy sector bet that investors can have. Of course, we should remember that RIL not only benefits from the traditional legacy business such as refining of crude oil and petrochemicals, but it also benefits from the new energy initiatives that it is taking. So that is one stock to look out for. Banaras Hotels. Okay, so hotel stocks have been on fire the entirety of March quarter, and why not? Banaras Hotels came out with a strong Q4 numbers, which is basically could become further trigger for more gains on the stock. Q4 PAT was up 196% on a year-on-year basis, Santo, and sales jumped about 46% again on a year-on-year basis because of what? Revenge traveling.
Well, let me tell you, but let me just point out here, CJ, that despite all this revenge traveling, yes, the full year numbers have shown a big jump, but they're still at pre-COVID levels, or just about lower.
So you progress slowly and steadily, right? You can't, in one quarter, you can't expect them to come back, recover entirety of the losses of pandemic.
Yeah, so the revenues are just about there, but if you look at the stock price over the last 3 years, it has moved up significantly higher. So
yes,
I would
absolutely.
think that probably now it's time for the stock price to catch up with the earnings, unless they are going to repeat this performance in the coming quarters.
We will see whether the market agrees with you or not. And as far as repeating the performance is concerned, remember the peak traveling season in India has still not started. It's usually the summer holidays when parents and kids and all, everybody goes out for trips and all, and the summer holiday season is usually the peak traveling season for India. So that is something possibly we could see more strength on Banaras Hotels. Lastly, Whirlpool India. So the stock has been on a downtrend for a pretty long time. It's just 3% away from its 52-week lows, and it's been falling 13% in 3 months. See, Q4 earnings fundamentally, if you look at the fundamentals, they are not pretty good for Whirlpool India. Q4 earnings are likely to be on a weaker side because there will be a lot of margin pressure because input prices have increased a lot for a lot of these consumer durable companies. Plus, a lot of the demand tailwind that they had, the pent-up demand that they saw in 2020 and 2021 is now tapering off. Why? Because people are now, going back to offices. So there is lesser requirement for a lot of the, home appliances that you saw probably in 2020 and 2021.
So if a stock doesn't perform in a raging bull market, then you really need to be cautious about that stock, CJ.
Well,
that's one of the market sayings.
Yeah, it is one of the sayings, but I will doubt whether this is a raging bull market given what has happened in the past 6 to 7 months. Lastly, the technical setup on Whirlpool is also quite, weak. It's trading below its 50-day as well as its 200-day moving average. So yeah, I mean from a momentum point of view, it could be a good bet for traders on the short term on the downside. So that said, we are done with the stock, Santo. But आज अंदर की खबर क्या है?
Yeah, so we saw a bulk deal of about 4 lakh shares in Eveready Industries, and the buyer was Rajasthan Global Securities. Interestingly, now Rajasthan Global Securities was the broking firm which the investor which had heavily sold.
Yeah, I remember
the last week's Veranda
Learnings IPO. Yeah.
Yes, it had sold at a discount to the issue price, and that is what caused all the mayhem.
The mayhem on NSE and BSE with the discrepancy in prices. Yeah,
so
I remember
Eveready Industry, again, interesting here. Promoters own just about 4% of the stock, and the fundamental picture again is not all that great. But there's been a lot of volumes in the stock consistently over the last since the start of the month. The stock seems to be consolidating in a narrow band. 92% held by public. It's not a hit with with institutional players either. So probably what you could be seeing out here is some
Eveready also has a lot of fundamental issues. I mean, that's what the battery business not doing that great, with the automobile space not doing great. The battery companies have been under the radar for investors in that sense. So fundamentally also there's not much going on.
Ansal Housing is the other stock which saw huge volumes yesterday, higher than usual. Housing Development Finance Corporation has sold about 4 lakh shares.
Wow.
5.74 lakhs.
5.74
lakh shares sold. And if you see over the last 1 year, HDFC has been consistently sparing its stake. It has sold close to about 70 lakh shares now. Now, in Ansal Housing, for almost the first 3 months of this year, you were not seeing any kind of delivery volumes, and overall trading volumes too were on the lower side. But in the last couple of weeks, that suddenly you've seen some bit of delivery volumes there. So again, I think most likely some HNIs must have got into the act and are trying to control the float.
I suspect these HNIs are very bullish on the real estate space.
They are, and again, there's been some improvement in the company's operating performance. So possibly that could be one of the reasons why there is action building up in that counter.
Right. That said, I think we should just take a last status check on the market. The Sensex is doing pretty well, up about 392 points, and Nifty is up about 120 points. So things, it's a good start, guys, and we have managed to at least hold on to the gain so far.
But remember, there's a sell on rise market.
Yeah,
CJ, that's how I would look at it.
It's a sell on rise or not. We'll catch up on that at 3 p.m. when we wind down the day's action. Right now, we wish you guys the best of the day, and please carry on with your trading and with the rest of the activities. We will catch you live back again at 3 p.m.
See you then, and have a nice day ahead.
And please post your feedback on the comment section below, and follow us on the links at the bottom of your screen. Have a great day ahead. Thank you so much.